Friday's fall seemed to be triggered by the especially strong U.S. non-farm payrolls report that showed average hourly earnings posting the strongest annual gain since June 2009. Traders worried the strong wage growth could spur the Federal Reserve to hike U.S. interest rates more than expected this year, slowing earnings growth and throwing a wet blanket on the fire of economic expansion. The sell-off introduced a new degree of fear into the market, analysts say. The biggest worry for investors seems to be government policy, both from the fiscal and monetary side. The issue is, did tax reform kill the bull market, or is tax reform a fiscal policy mistake? That's what the market is struggling with, said Nicholas Colas, co-founder at DataTrek Research, in a phone interview. Colas said the market now has to factor in the issue of inflation, which for about a decade has been largely a non-factor, and whether that will slow or overtake gains in growth and earnings. Was it a good idea to hit the accelerator when the economy was already at the speed limit, he said. There is also the issue of debt. As the Fed has already announced it will start to reduce its more than $4 trillion of bond holdings this year, the increase in debt issued to pay for the tax cuts and the reduction of the Fed's holdings could flood the market, driving prices lower and yields even higher. There's a lot of maturities coming due, so that means a lot of supply that needs to be taken care of, said Ellis Pfeiffer, market strategist at Raymond James in Memphis, Tennessee, via phone. And that's been accompanied by a fear of the looming battle over the debt ceiling. The government will need to raise its borrowing limit soon, and there's no deal in sight between congressional Democrats and Republicans. Because a deal will require 60 votes to pass, investors are worried that the government could shut down right in the midst of a brewing market meltdown. The release of a memo written by Representative Devin Nunes on the FBI's handling of a court warrant in the investigation of the Trump campaign's dealings with Russia was the icing on the cake, said Art Cashin, UBS Director of Floor Operations at the New York Stock Exchange in a note to clients. That prompted an instant buyer's boycott since no one wanted buy into a potentially wild Washington weekend with possible resignations and even a possible constitutional crisis, Cashin wrote. The attitude was I might as well wait until Monday and a possible all clear. With the buyer's boycott as the key factor, the stock market went through several stages of near free fall in the afternoon on only marginally higher volume. That's got some investors looking to take some chips off the table. Dion Rabouin is a markets reporter for News Pulse Finance. Follow him on Twitter, at Dion Rabouin. Follow News Pulse Finance on Facebook, Twitter, Instagram, and LinkedIn.